Hello friends, today's topic is leave encashment, which is part of the chapter of salary. In this topic, we will be discussing the part exemption availability under section 10 when an employer receives, when the employee encash the leave to be availed from the employer. Hello friends. So today's topic is leave encashment, where the leave is encashed by the employer. In that case, the amount received is taxable as salary and the employee is also eligible for a part exemption which is available under section 10. So what is leave encashment? In this case, when an employee renders services to the employer, he is eligible to certain leave which may be on a general terms a 30 days leave on an annual basis. If the employee does not avail these services, then for example, if 30 days are balance leave available in the hands of the employee, then the employee is eligible for encashment. That is, this 30 days leave can be converted into monetary terms and the amount can be received as a part of salary in the hands of the employee. So in the notes on the screen, employees are allowed leave during the period of service, may avail leave. It's at the option of the employee. If leave not availed, then leave can lapse, accumulate, encash. So there is lapse, and lapse meaning there might be a policy of the company in which, for example, 50 days leave is eligible on per annum basis to the employee, and at a time only 30 days leave can be accumulated, can be carried forward. So the remaining 20 days leave, for example, if the employee hasn't availed any leave and he has balance 50 days leave pending, so out of 50 days, 20 days will lapse and only 30 days will be allowed to be carried forward, accumulated, and to be carried forward. So if leave not availed, then leave can lapse, it can accumulate, and it can be encashed. Encashment can be for every year or at the time of retirement or termination. So if encashment is at the time of the employment, then it will be fully taxable in the hands of all the employees. Only if the amount is received at the time of retirement or termination, that we will look into the part exemption criteria. Encashment of leave is included under the definition of salary. However, part exemption is allowed under section 10. So if leave encashment is done by a government employee, it is fully exempt. If leave encashment is done by other than a government employee, then the criteria is list of the following: amount of 3 lakhs, amount of leave encashment received, amount of salary, amount of unutilized earned leave into average monthly salary, and last criteria is 10 months average salary. And salary for the purpose of leave encashment is standard one, which is basic salary plus DA if the terms of the engagement provide, plus turnover based commission. On the screen, encashment of unutilized earned leave at the time of retirement of government employees is fully exempt. Encashment of unutilized earned leave at the time of retirement of other employees, not being a government employee, is least of the following. It is amount actually received, unutilized earned leave, which needs to be calculated in monetary terms, into average monthly salary, and salary is nothing but basic salary, DA if terms of the employment provide, plus turnover based commission, and 10 months average salary, and 3 lakhs, whichever is the lower of the below. While computing the unutilized earned leave, Earned leave entitlements cannot exceed 30 days. Any entitlement above 30 days is supposed to be lapse, which is coming from the Act. Cannot exceed 30 days for each year of service rendered to the current employer. On the screen, average salary is nothing but average of last 10 months immediately preceding the retirement. So here, immediately preceding the date of retirement means, in the case of gratuity we have seen it's monthly wise, in which case the 10-month criteria is to be calculated immediately preceding the month. Here it is immediately preceding the date of retirement. So if an employee is retiring on 15th of Feb, then your salary, 10-month salary, will be computed from 14th of Feb, which is immediately preceding the date of retirement. And salary is basic pay, dearness allowance in the terms of the retirement benefit, and turnover based commission. Leave salary during the period of service is, here it is written as exempt, which is not exempt, it should be taxable. So you will have to make change in this particular section. Leave salary during the period of service is always taxable. Aggregate amount of leave encashment cannot exceed 3 lakhs. Same criteria as gratuity. In the past years, if you have availed leave encashment exemption, which for example if suppose is 1 lakh, then the exemption amount in your case for the current employer for the current year will be reduced to 2 lakhs, which is 3 lakhs the statutory limit, and minus 1 lakh the amount which you have availed earlier as exemption. So only 2 lakh amount will be available as exemption in your case. Now section 1010 AA, which is the bare act of this section, which allows us to claim exemption for leave encashment. So clause 1, which is any payment received by an employee of the central government or a state government as the cash equivalent of the leave salary in respect of period of earned leave at his credit at the time of his retirement, whether on superannuation or otherwise. So retirement, whether on superannuation after attaining a age of 58 years or 60 years, or otherwise, that is at the time of termination of services. In a nutshell, the amount received, the unutilized earned leave encashed by a government employee or state government employee is fully exempt in their hands at the time of retirement. At the time of retirement, which could be in the form of superannuation or at the time of termination of services. This is what clause 1 of section 1010 AA specifies. Clause 2, any payment of the nature referred to in subclause 1 received by an employee other than employee of central government or state government, other than an employee of the central government or state government in respect of so much of the period of earned leave at his credit at the time of his retirement, whether on superannuation or otherwise, as does not exceed 10 months, calculated on the basis of average salary drawn by the employee during the period of 10 months immediately preceding his retirement, whether on superannuation or otherwise, subject to such limit as the central government may by notification in the official gazette specify in this behalf. In this particular case, it's 3 lakhs, having regard to the limit applicable in this behalf to the employees of that government. Now provisos, provided that where any such payments are received by an employee from more than one employer in the same previous year, the aggregate amount exempt from income tax under this subclause shall not exceed the limit so specified. So in our example, it was 3 lakh minus 1 lakh, so it cannot exceed overall 3 lakh amount. And in the current year, which will be covering in the next proviso, so cannot exceed 2 lakhs. 3 lakh minus 1 lakh, so exemption cannot exceed 2 lakhs from the current employer, amount received from the current employer. Provided further that where any such payment or payments was or were received in any one or more earlier previous years also, and the whole or any part of the amount of such payment or payments was or were not included in the total income of the SSC. That means it was claimed as exempt of such previous year or years. The amount exempt from income tax under this subclause shall not exceed the limit so specified, 3 lakhs, as reduced by the amount, or as the case may be, the aggregate amount not included in the total income. In an example is 1 lakh of not included in the total income of any such previous year or years. Explanation: for the purpose of subclause 2, the entitlement to earn leave of an employee shall not exceed 30 days. So in our notes section also we had discussed that 30 days is the criteria. Any leave in excess of 30 days shall lapse. So while calculating the exemption under section 10(10)AA for the purpose of leave encashment, the 30 days leave criteria should be calculated. So for example, if 30 years have been completed by the employee and based on 30 days criteria, 30 into 30, which will be 900 days are allowed to him during the period of 30 years, assuming that the employee hasn't availed any leave. So his eligibility needs to be determined based on 30 days criteria per annum for every year of actual service rendered by him as an employee of the employer for whose services he has retired. Now the illustration part. Mr. X retired on 1st December 2019 after 20 years and 10 months of service, receiving leave salary of 5 lakhs. Other details of his salary are: basic salary 5,000 per month, 1,000 was increased with effect from 1st of April 2019. Dividends allowance 3,000 per month, 60% of which is for retirement benefits. Commission is 500 per month. Bonus is 1,000 per month. Leave availed during service. The amount of leave which has already been availed is 480 days. He was entitled to 30 days leave every year, which is as per section 10. You are required to compute his taxable leave salary, assuming he's a government employee, assuming he's a non-government employee. So if he's a government employee, part A would be the amount is fully exempt as the amount is received. If I go to the solution once again, go to the illustration once again, the X is retired, so any amount received by a government employee at the time of retirement, which could be in the form of superannuation or termination, which is not coming out of the illustration. So if Mr. X has retired and he's a government employee, the amount is fully exempt. Exempt in the hands of the employee. So taxable value in his case will be nil. And for the non-government employee, first criteria is the amount of 3 lakh. Second is the amount of leave encashment received. So the amount of leave encashment received in his case is over here 5 lakhs. So second criteria is 5 lakh amount. Third is the calculation part, which will be we have to calculate 10 months average salary. Average salary of 10 months needs to be calculated. So the base salary over here is 5,000 per month which has been increased with effect from 1st of April 2019. So here 1st December 2019, immediately preceding the date of retirement, so we will be calculating it from 30th of November, and April will be for 2 months and remaining 8 months will be for 5,000. So 4,000 per month, that is Feb and March is 4,000 per month, and with effect from 1st of April 2019 it has been increased 1,000, so 5,000 per month into 8. So here the salary is basic salary into 8 and 4,000 into 2. Then since it's a standard salary, we will be including dearness allowance, which will be 60%. So 1,800, which is nothing but 3,000 into 60% into 10. Then commission is nothing but 500 per month. 500 per month is nothing but into 10, and this is 10 months average salary, which will be coming to 5,000 into 8 plus 8,000 plus 18,000 plus 5,000. So it is coming to 71,000 divided by 10. The only thing is this turnover based commission, there is nothing mentioned over here. So the commission 500 per month, you will have to mention a note therein where it has been assumed that the commission is based on turnover, and in absence of information you can also mention that this commission is not based on turnover and accordingly it hasn't been calculated. So maybe you can put a note over here that commission is not based on turnover and accordingly this 500 need not be calculated. So in that case your answer could be 5,000 needs to be removed, so 71,000 minus 5,000, which could be 66,000 over here, which is criteria of average monthly salary for 10 months. So here 10 monthly salary, here always the criteria should be average monthly salary of 10 months. So your salary for 10 months over here is always, this is your per month salary and it is supposed to be into 10. So the average 10 monthly salary is coming to 66,000 over here, which is 5,000 for 8 months, 4,000 for 2 months, and 1,800, which is 3,000 into 60%, and which is again calculated for 10 months. So 66,000 is the third criteria. Fourth criteria is coming to number of unutilized leave. Number of unutilized leave, the total completed year of service, anything to be rounded off would be the preceding month, so any fraction is to be ignored. Here in this case we have 20 years and 10 months, so it should be completed year of service. So here we will calculate 20 years only. 20 years into 30 days leave, which is coming to 600 days, out of which 480 days is already utilized, so 120 days is to be converted into cash equivalent. For the purpose of converting into cash equivalent, 120 days into average monthly salary is to be calculated, and 120 days will be divided by 30 days, for ascertaining the number of months. Okay, so 120 days divide by 30 into 66,000, 10 monthly salary, divide by, we want monthly salary, which is coming to 120 divided by 30, 4 months, into 6600, 26,400. So least of the following is 26,400. So 3 lakh is the statutory limit, 5 lakh is the leave encashment amount, 66,000 is the average monthly salary, 10 monthly average salary, and fourth criteria, in which case the cash equivalent amount of the earned leave, of the unutilized leave, has been converted into monetary terms, which is 26,400, and 26,400 will be deducted from the 5 lakh amount, which is the leave encashment amount, and the taxable amount is 4,73,600, which is 5 lakh minus 26,400. So exemption under section 1010AA is 26,400 in this illustration. So we come to end of the leave encashment part. In leave encashment, we have seen that where an employee is eligible to receive the unutilized leave amount, is eligible to encash the amount, and that too at the time of retirement or termination of services, then the private employee is eligible for an exemption under section 1010AA. The exemption amount will be least of the following: the amount of encashment received, the amount of leave encashment received. In the illustration it was 5 lakhs. The amount of what is the statutory amount? In this case it is 3 lakhs. Then second criteria, then the third criteria is average monthly salary for of 10 months, which is immediately preceding the date of retirement. In our case it was from 38th of November 2019, 1st of December being the date of retirement. And the last criteria is the cash equivalent of the unutilized earned leave. In our case the total leave entitlement of the employee was 600, which is 20 years, and 20 years should be the completed year of service. In our example, in our illustration, it was 20 years into 10 months, so any fraction was ignored. So for 20 years into 30 days per annum, the 30 days per annum criteria would be applied. So over 600 days of leave was available, out of which 480 leave was already availed by the employee. So this 120 days was converted into number of months, which is divided by 30 days. So 4 months leave was multiplied by the average salary of the employee, which is immediately preceding the 10 months. His average salary was 6,600 per month, and accordingly this amount was converted into monetary terms, which was coming to 26,400, which was the exemption amount under section 1010AA. Ultimately the taxable amount was 5 lakh minus 26,400, and the taxable amount was 4,73,600. Thank you.